Hello traders, today is February 4th, 2015, and the market has just gone yellow, which means that if you're an aggressive trader, you can establish some long positions in stocks that are undervalued and are at the proper breakout points, and you can also establish or continue some short positions from the red market we're just coming out of. Now, we're looking at Apple today because we believe Apple is at that spot where it could break out. Now, breakouts about 40% of the time don't work, but 60% of the time they do. And so we want to make sure that all the stars are aligned in our analysis. And one of those analyses is a top-down approach, which means that we start with what's the market doing? Well, it's yellow. It's not green. If it were green, it would really be jumping on this trade. But Apple is at its all-time high, and it looks like it wants to break out. If you look at this chart, you'll see that Apple's right around $120. And so we're looking at establishing a position in Apple. And the way we're going to do it is with the March 120 calls. Now, we just priced the March 120 calls. The Black-Scholes model says that the March 120 calls for Apple are basically about 370, and we are purchasing them for 380. You want to wade in very slowly, so you want to buy your minimum to establish your position or your half position to get into your position here. The 120s would be the at the monies because the stock is right at 120 right now. And let's take a look at why we believe that Apple is breaking out. So you'll see this line here is the all-time high that it broke through back in October. And it didn't do that well on the breakout, but then after we got some good volume and a green market and all that kind of stuff, we had a big uptrend in that. So you could see that stock went up about 20%. And then it had its correction. All the people that were happy with a 20% gain started to sell, and it created a cup or really more of a consolidation. So it was a range-bound trade, as you'll see right here. Now it's at the top of that range, and a couple of days ago, it hit the high of 120 even, and it came down. Well, why? Because we had a red market, and the market wasn't ready to allow these stocks to break out. And that's okay. We were ready for that. We want to buy high probability breakouts. So let's take a look here at the daily. You're seeing the daily here shows that there's a bunch of highs that are getting touched, and a couple of days ago it hit 120. And today it's hitting a little bit higher than 120. And if you look at the volume on that today, it's already at 31 million and it's 11:30. So the market's been open 2 hours, and we should blow this 55 million average away. And if so, we have what we think is going to be a pretty good high volume breakout in place. Let's take a look at the hourly, and then that'll be enough probably for today. But you can see that the hourly, this is now trending upwards. The moving averages are breaking up, and it's now solidly established above this high of 120, and it's trying to make higher highs and higher lows. See that? So now we have a trend in place on the hourly, and the more people get interested in this, hopefully the more it'll go up, especially if the market continues to try to establish a trend to the positive side. So the March 20 calls at about 380, 390, somewhere like that is probably where you want to get into this. It's okay to chase this a little bit because it is a breakout. And just don't overpay for the options. Keep your risk management in place. Don't lose more than 20 or 25% on the option on the downside, and try to capture some of the upside. Our goal is to get 75% gain on the option and add to it as it goes up. Good luck.